YouTube, what's going on? This is TerrenceRe back at you with another video, another stock market update for today, August 31st. The market actually, the S&P 500 ended down on the day. So we can look at the SPY over here. The Qs, the triple Qs, which is the ETF of the NASDAQ. So the NASDAQ ended up, which is mainly your tech sector. So if you continue watching, I got some special. I'm going to show you another way to trade the tech sector, which is cheaper. Right now, I got the triple Qs up on the screen because, as you can see, I got some levels up here. Now, these levels I did on the intraday chart. Let's just get right to it, what I wanted to show you guys. So right here, what you see, let's get this off of the screen. Let's make it the way you can see. Now, looking at it right here, you see on the left, we got the triple Qs, which is the ETF of the NASDAQ, right? The NASDAQ 100. It's trading right now at 377.99. Uh, for a little more than half of that is the XLK. This is a Speedy Trust Technology ETF, right? This is one of the, so you got like 11 main sectors of the S&P 500. I'm going to open them up over here on the right. They're over here on the right. So if you want to get these, you can go back, watch the video, pause it, whatever, and write them down. And the XLF, which I always have on my main watch list, which is the financials. XLE, I always have on my main list. That's the energy. I always watch those two. XLU is your utilities, and then XLK is your technology, right? And then you got the rest of them. I don't know all the rest. I think XLY is consumer staples, and one is healthcare. I think XLRE is real estate. But anyway, they make up the main 11 sectors of the S&P 500, right? And so with the XLK being a $175 product, you see, if you're looking at this, now these are intraday charts. Each one of these candlesticks is an hour, right? If you're looking at this and you can see that it moves, it's a similar movement, right? Now, this on the right side, I only look at it's called the volume profile. The volume profile I only really look at on intraday levels. I like to look at it on like the 30-minute and the hourly. And it allows you to take volume and show it instead of showing it at the bottom of the screen going across horizontally. You can look at the volume vertically, and you can see like I like to see like little pockets where you'll see your where the market is congested. You'll see where the volume is heavy, and then it blows through the light pockets. Helps me see support and resistance. Now, this is just a cheaper way of trading. Let's see, of trading the technology sector. And so what I'm looking at is I'm looking at how similar the charts are. And so with me having levels on both, now me personally, I went on ahead and traded the triple Qs. I bought a call today to get long. Now I do think that right here, see, we got this gap. I'm just betting on the market. See, today, like the market, I got a level right here. Look at it. The market went right up there and touched it. That fib extension level and then just sat. So, and then we got a cross on my moving average. So I could quite possibly, I would expect to see maybe tomorrow to see the market kind of drift a little bit. Maybe it could, or it could blow right through. I do expect it to make it up here to right around 392. I bought the 390 call. All right, I'm betting on the market taking these old highs out, filling this gap and filling this gap. The technology sector is being led right now. You got Nvidia making a push higher. Even Tesla was up today. Um, AMD closed lower on the day, but I do expect for these stocks to rebound maybe sometime next week. I wouldn't be surprised if we got a lower move in the market tomorrow. So, but intraday wise is where I found those levels, and I'm making a trade, making a bet on it that it's gonna go higher. You may hear me say bet because, in my opinion, this is just like gambling. A lot of people will say that it ain't. Yes, I use strategy. Yes, I use. Some people go to the casino and use strategy. There are strategies there. It's not a big deal to me. It is what it is, right? I made my peace with whatever you want to call it. Doesn't matter to me. I'm gonna do it regardless. That's my little stick on that. But I bought a call in the queues because I think Nvidia will continue to push higher. Tesla at some will make its rebound and push higher. Google. My really trading the cues to the upside is because I really feel like AI. There's no stopping it. Like right now, I'm actually learning how to use in the production of my videos. I use a lot of different websites, and it just it streamlines my process and makes it a whole lot faster. I'm a one man operation, right? I'm not big enough YouTuber yet to where I got a team. So to cut down on time, they got all these different AI prompts. I noticed I mean, if you've been following the channel, you'll see that a couple of my thumbnails are starting to look different. That's because I'm implementing different AI stuff, right? And just think about it on people who have YouTubers who have massive teams. They have people that normally take time to develop that. That's gonna cut out people's jobs. So it's my belief that AI will replace like 80% of the workforce in the future. So how would you bet on that if you believe that? You would be betting on tech, right? So I would rather play the cues and the main stocks that represent technology, and they're for the most part are all over here. On my watch list: Meta, Apple, Amazon, Google, Microsoft, Tesla. Maybe not Netflix so much, not yet. Nvidia, AMD. And you may say, what? Boeing and Caterpillar, which I've said before, are kind of like main staples of the overall market. Boeing and Caterpillar shows you the overall health of the stock market overall in the United States. Um, so that's why I have Boeing and Caterpillar on here. Now, Boeing is a special stock that I am looking at right now. I am watching Boeing because I am going to place a massive short. For me, it's going to be massive, right? I'm waiting on Boeing. I would like to see. So we had this red candle today. Now, this is an engulfing candle. This candle took out one, two, three candles. So it would not surprise me if Boeing just kept going down. I actually do think that Boeing will end up down around 200. So you may say, why not go ahead and put the short on now? When you want to buy puts, I personally don't want to buy the put when the market is down. I'd rather buy it when it's up. You can get the option cheaper. I would like to see it maybe hang right in here and then next week maybe push up higher, almost like a head and shoulder. See your shoulder, head, shoulder, and I want to see it reverse like right here. I want to see this gap filled. I want to see it get up to right around, let's call it 236. I'll probably put an alert on at 236, and then I'll be looking to buy puts on Boeing around the $200 mark. So I probably either come out 50 days or 78 days. You can get that $200 put for right around right now, 340, 360 bid ass, so probably about 350. And if the market goes up, you'll probably be able to get it for somewhere around 200 bucks, 150, and be able to make 1,000 on it, right? So you can literally 10x your money. I would rather see it go up some more though. So if it's the market, if I come on here and the market's down tomorrow and it's barreling down through there, I still may do it, but not at the scale that I would do it if I can catch it up here, where I would probably buy multiple. So that's that for Boeing. One thing on the Tasty Trade platform that they have is if you come over to Tasty and then move over. Now they do have, you see it says AI stocks. You can click on that and it'll show you a watch list full of AI stocks, so ways to trade artificial intelligence, right? You got Palantir, you got Snowflake, IBM, um, ANET, which ANET beasted today. It was up $8. Um, I was watching the compound with Josh Brown and Michael. But no, I was watching CNBC today, and I think Josh Brown was talking about it on there. It was like this is a good play if you want to get AI exposure. Now, keep in mind you are buying it like it's up, right? Would be a great one to illustrate drawing a trend line on. But you can see that it's up right now. Let's hide the indicators and let's do something like, let's hide all the indicators. Let's just do, this is a perfect stock to work on, like drawing some trend lines. Let's see if I can, I want to zoom out a little bit more. Let's see if I can get a 2-year chart. There we go. Let's zoom out. All right. So something like this, right? I'm going to move, let's see if I can move it over. Let's give me some more room. I'm gonna move it over from the right some like that. Now, and that's just because my eyes just seen it when I clicked on here. We got like it's been trading in a range, but you can see the range like going up, right? So I would do something like you could either come here, and there's no art, there's no science to this. This isn't art. So I probably would do something like this. I will draw trend lines through wicks, right? And these are wicks. So we got a nice little something. We got a wick here, a wick here. This is an effective trend line. I didn't go through any of the bodies of the candlesticks. I just went through the wicks. Right? Let's see. Look at this. So you got a touch, 1, 2, 3, 4, almost a 5. Now, let's look at what that trend line will look like at the bottom. What could we have down here to kind of show like a little range? So something like so. Even though I did go through the body right there a little bit. That's why I said it's not. So this would be like a nice little trading range, right? And you can see it was here. Then it broke. Then we got this pop to the top. So it took these highs out. I probably, if I had been looking at this, I would have had something here. And you can see it tested, it pulled back, and then shot through. And now we got a range of it going up, right? From here, this would be like your pole. It's almost like a little pennant. It was going up. Then we got here, double bottom, up. You know, a double top here, down. Look at it. Here, up. Now, me personally, like looking at something like this, I don't want no parts of it going higher. I don't know. Let's look and see what the I'm bring the indicators back on because I want to look and see. So the RSI is showing a 66. So it's not quite overbought yet. So you got a little bit, I like to think you got a little bit more upside, being as that it's not overbought quite yet. Let's look at the MACD and see what the MACD looks like. So this is when, even when I pull up a new stock or I look at something, and I did not plan to look at this for this show, and you can see we got a breakout on the MACD. So this stock I can run up some more. Crossover on my stochastic is not overbought on stochastic, so we got a little bit more room to run here. Gapped up here, so this stock could possibly continue to go higher. Right? Maybe might be a good idea to look at a weekly chart. Um, This stock ain't been around that long. Looks like we got 3 years. So this is a 3-year weekly chart, and it's still up. So it's moving. This may be all-time highs for it. I don't know a lot about the stock, but this is the process that I go to when I pull up a stock and I see something that, look juicy, like I might want to trade it. And these are the things that I go through, just like that. If I see like a pattern that stands out to me, I'll look at it just like I did here. And we can see that it's breaking to the upside. So I would be careful about getting into this though. Right here, you're buying something going higher and it's up, so just be careful. May not be a bad candidate for a cover call instead of just buying it, and without no cap in sight. Maybe you go in and buy 100 shares, and then maybe you sell the 210 call, right? So you can collect about $4 in premium. If you can get it up, if you can get there to 210, I don't know if I bought it, one probably sell to 200 and just try to get about capture. You don't have a lot of strikes, so I don't know if I would sell to 200, 210 maybe. You want to be at 205, and I don't see the liquidity here to really be trading options. So it's not real liquid. And you can also come over here, see liquidity. It only got 2 stars. I generally only trade stocks they have at least 3 or 4 stars. I only got 2 stars. I don't like to trade it, at least not options anyway. So something like this, you probably be just stuck with like trading stocks. Because if you trade options, you might get smacked around in here. Well, it may not, you may get bad feels on your option plays. And I want to talk about TLT because I've been talking about the bonds, and I want to see if you're looking right now, the bonds. You see this? If you guys been following, this I drew this mark maybe last week sometime, and you can see that it's held, right? So here was the gap, the support. It came right here. We got an up move, a little pullback. Now you can see the stock is riding my moving average. So the TLT is right here, right? So we might see some resistance right here. Maybe it can bust through. So, maybe the bonds are finally back in play. Um, you don't have a high IV rank, so I would just be careful. Everything's on the board, I guess. With it moving like this, maybe a strangle. Maybe you sell the 20 delta here, come here, sell the 22 delta. Boom. You got a 68% probability of profit. Collect 134 premium. Maybe, like I said, it doesn't have a high IV rank. So this may be something where maybe a cover call, buy the share, sell the call, or you maybe wait on a pullback. And I actually think the bonds will go lower though. I still think the bonds will go lower. They may come up in here and chop around. I still think we'll get a nasty move to the downside. I think yields will go higher. I was watching a podcast and they were saying, well, there's no guarantee that yields have to go higher if bonds go lower, and that's true. Because you can see right here that the yield, it did turn over, and so maybe the yields will come down. That might be the best of both worlds, to get the bonds to rise while yields go down, or at least stay neutral. That might not be a bad play. So just to recap what we talked about, mainly the Qs and XLK, as you see right here, are similar. Both are in the technology sector. The XLK is just a cheaper play, right? Cheaper investment. You can buy the XLK, and it's $175 stock instead of $377, and you're getting that same type price action for the most part as you're getting with the triple Qs. Me, I prefer the triple Qs, but The way I'm trading it, I'm not spending a lot anyway. And also, I do think that we're gonna get a little bit more to the upside on. So I'll show you the cues, right? And then I can go to the SPY and show you the SPY. You can see it's a gap here. And basically, I just think that the gaps got to get filled to the upside. They don't have to, but I just think that they will, right? And if we can get these gaps to get filled, you don't have any, got a small gap right here in the diamonds. Let's look at the IWM. IWM got a gap up here. That's a gap. So I think these gaps will get filled. And then I think once the gaps get filled, then it's time to short. I actually think that the market will go up, fill the gaps, and then I think that we'll get some type of, you know, we'll get something to take the market down. So let me know, guys, what you think. Let me know what you're trading. Hit that like button, subscribe, hit the bell notification so that way you know when videos coming out. I'm trying to do these little updates every day to keep you abreast on what the market's doing. And this weekend, be on the lookout for how to draw trend lines. I'm gonna go a little bit more. I did a little bit today, but I'm gonna, go over a little bit more, an easier way to do it than the way I did it today. All right. And with that, guys, I'm out. Peace.